What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk a little bit about the Federal Reserve last rate hike of the year, also raising us to the highest level in 15 years, and what they just did to the market. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos, subscribe to my second channel for weekly videos, get yourself some DYDSS merchandise to help support the channel. Got the limited edition Christmas line, only available until Christmas, and a portion of the proceeds are going right to St. Jude Children's Research Hospital. Try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description. And of course, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. If you refer just one friend by the end of the month, one person that you know, they're going to give you a guaranteed free share of Google with the chance of winning all the way up to 20 free shares of Google. Everything will be linked in the description. Alright, so for those of you that didn't tune into the hour and 46-minute long Federal Reserve live press conference yesterday, don't worry, I didn't either. I was at work, but I went through it last night, and now here I am filming a quick summary. So, the Federal Reserve just hit us with the final rate hike of the year. They've been hiking rates almost monthly for several months now at this point in an attempt to combat the sky-high inflation we have all been painfully going through this entire year so far. Well, fortunately, June is where we saw peak inflation, and it has been slowly dropping ever since. But we had one last Fed rate hike scheduled for December 14th, which was yesterday, and we got a 50 basis point hike, as expected. The November CPI report, which just came out 2 days ago at this point, was better than expected, and the most recent JOLTS report shows us that we're seeing a decrease in the number of job openings per unemployed person, which is a good thing, and Jerome Powell himself said that this is right in line with what we were planning to see. So right now, at the moment, things are going the way the Federal Reserve wants them to go. So there was no concern that we would see a surprise rug pull by the Fed choosing to hit us with a bigger rate hike than expected. This has happened in the past, and this has also been a major concern in the past. We didn't have that concern this time around, and that would obviously crash the market. Instead, the market crashed for another reason, or another list of reasons. Partially in response to this particular 50 basis point hike, raising us to the highest level in 15 years. You can actually see on this chart right here that I'm putting up on screen, this was the stock market yesterday. You can see exactly when everything just nosedived. This is a screenshot I took from the Webull app. Remember to download the app and fund your account for up to 12 free fractional shares and make one measly referral by the end of the month for a guaranteed free share of Google and the chance of winning all the way up to 20 free shares of Google. Link in the description. But as you can see on the chart, upon the market close, the S&P was down 0.61%. The Dow Jones was down 0.42%. And the NASDAQ was down 0.76%, all following a fairly strong day. Everything dropped as the Federal Reserve press conference was getting ready to begin, which is typical. This happens every time we have a Fed rate hike. As soon as Jerome Powell comes out to speak, everything just crumbles. Anyway, we now have rates raised to the highest level in 15 years, which makes borrowing money much more expensive, which, sure, absolutely helps cool off inflation, but it's also going to hinder growth. Companies are going to be forced to slow down, and we're already expected to see hiring freezes and big layoffs early next year, which By the way, next year is only like 2 weeks away at this point. We're going to see in Q1 of 2023 how this all plays out for big businesses and large companies, and also real estate, by the way. That's another thing I personally believe we should all be paying very close attention to. Even if you don't care about real estate or don't plan on buying, it's important to stay informed, so keep your eyes peeled. This is what I always say about all of the different markets, including the markets that you don't like, including the markets that you're not affiliated with, including the markets that you really want nothing to do with or couldn't care less about. You should still be paying attention to them anyway. You don't need to invest in them by any means. You can go the rest of your life not putting a penny in those markets. Nothing wrong with that. No issue. But please still pay attention. Stay informed. Stay educated. And make sure you are following the trends. The trend is your friend. And when one market begins to move, oftentimes the other markets end up following in the same direction. And you can stay far ahead of the curve by paying attention to all the different markets. If you see one market move, odds are you're going to see the other market start to move. So pay very close attention. I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. When it comes to the Federal Reserve raising rates, a 50 basis point hike as expected. No surprise there, no rug pull there, but it's brought us to the highest level in 15 years. What are your thoughts on that rate there? And what do you think growth is going to look like moving on into Q1 of 2023? And let's not really get ahead of ourselves here, but also Q2 of 2023. What do you think the next 2, 3, 4, 5, 6 months are going to look like when it comes to growth? Head on down to the comments and let me know. If you guys like today's video, please hit that like button, subscribe if you're new, subscribe to my second channel, which is my backup channel for exclusive weekly content. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. T-shirts, hoodies, stickers, coffee mugs, and a bunch of different designs. We have the limited edition Christmas line only available for the next couple of days. Get one while you can. Time is running out, and a portion of the proceeds are going right to St. Jude Children's Research Hospital. It's the season of giving. Help us raise a little bit of money to help children with cancer. Link in the description. Try out some G Fuel Energy Formula. $5 off your first order by clicking the link in the description. They have over 50 different flavors to choose from. I recommend Snow Cone, Peach Rings, and Bahama Mama. Link in the description. They have a buy one, get one free sale going on periodically throughout the month. So go ahead and buy one, go ahead and get one free, and go ahead and get $5 off on top of that. And last but certainly not least, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. You could deposit as little as you'd like, even as little as a penny. It still works, it still counts. You still get your up to 12 free fractional shares, so don't pass up on that. If you make one referral, if you send the referral link, or if you click the little invite button and send it to one person that you know, one person, by the end of the month, Webull's going to give you a guaranteed free share of Google, which is worth around $100 right now, give or take, with the chance of winning all the way up to 20 free shares of Google. It's whatever you land on, but you're guaranteed at least one, so you're walking away a winner no matter what. Don't pass up on an opportunity. And for every friend you refer after that, they're going to give you 15 free fractional shares of some of the most rock-solid companies on the planet. Ford, Coca-Cola, Starbucks, Apple, the list goes on. And for every friend you refer, they're going to give you an entry to the New Year prize board, which means in January, they're going to be taking all the people that made referrals in December, and they're going to be taking some random names from that list and sending you even more free shares of Google. Everything will be linked in the description. Please, for the love of God, don't pass up on an opportunity. And I want you guys to head on down to the comments and let me know one more time, what are your thoughts on this rate hike? The last one of the year, a 50 basis point rate hike. Nothing surprising there, nothing too shocking there, but it has brought us to the highest level in 15 years. What do you think that is going to do when it comes to growth, when it comes to companies, and when it comes to the economy moving forward into 2023? Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.